While most investors chase meme coins, the world's biggest banks are quietly testing something far more powerful. XRP and HBAR, two cryptos designed not for hype, but for the backbone of global finance. From the US to Singapore, from London to Seoul, real payment networks are quietly integrating these technologies. And no one's talking about it. In this deep dive, we uncover the hidden partnerships, pilot programs, and payment corridors that could make XRP and HBAR the financial infrastructure of the next decade. Banks are quietly testing XRP HBAR for real payments. What they're not telling you, Chapter 1. The silent shift begins in 2025. A quiet revolution is happening behind closed doors, inside the very institutions that once called crypto a threat. While headlines focus on Bitcoin ETFs and meme coins, over 300 financial institutions are experimenting with distributed ledger technologies, especially those built for speed, regulation, and scalability. And right now, two names keep surfacing in confidential reports: Ripple's XRP ledger and Hedera hashgraph, HBAR. Why? Because both networks can do what legacy systems like Swift or Fedwire can't: instant settlement, near-zero fees, and real-time compliance visibility. Chapter 2. Ripple's real-world pilot projects. Let's start with Ripple. Back in 2017, RippleNet was a concept, a dream to connect global banks on one distributed network. By 2025, that dream has become reality. Ripple now partners with Santander, Bank of America, PNC, and the National Bank of Egypt, among others, not for speculation, but for cross-border transaction testing. In fact, according to a recent Bank for International Settlements report, over 80% of central banks are exploring blockchain-based settlement systems, and Ripple's tech is part of multiple early-stage pilots. Here's the catch. Many of these tests don't use the term XRP publicly. They use internal names like DLT Bridge or Liquidity Hub. But make no mistake, XRP Ledger is quietly running behind them. Ripple's on-demand liquidity, ODL, product allows banks to move funds in seconds using XRP as a bridge currency, replacing the slow, costly Swift system that still handles $5 trillion daily. That's the difference between a 3-day wire and a 3-second settlement. Chapter 3. Enter Hedera, the corporate blockchain now. Let's talk about HBAR, the dark horse that's quietly building the digital backbone for corporations and governments. Unlike traditional blockchains, Hedera uses a hash graph consensus, allowing it to process up to 10,000 transactions per second, nearly fee-free. And who's running Hedera's governance council? Not crypto influencers, but giants like Google, IBM, Boeing, Standard Bank, and LG. These companies aren't here for speculation. They're testing real-world use cases, from digital identity to tokenized carbon credits, and yes, international payments. One insider revealed that several banks in the Middle East are using Hedera's token service to simulate cross-border settlements, using stablecoins backed by national currencies. HBAR isn't aiming to replace XRP. It's complementing it, building the infrastructure for programmable money that banks can actually trust. Chapter 4. The bridge between XRP BAR. Here's where it gets interesting. XRP and HBAR aren't competitors. They're becoming partners in the same global transition. Hedera handles permissioned corporate logic. Ripple handles liquidity and settlement. In several sandbox tests, including those coordinated by the Digital Pound Foundation and the World Economic Forum, both technologies have been used side by side to simulate cross-border CBDC payments. Ripple's own CTO, David Schwartz, has hinted multiple times that future cross-ledger interoperability could involve Hedera, calling it a technically elegant network for enterprise-grade DLT. If these networks continue merging behind the scenes, the US could soon see a multi-network payment backbone, where traditional banks transact in seconds securely with tokenized currencies. Chapter 5. US Regulatory Green Light. In 2024, Ripple scored a partial legal victory over the SEC, setting the stage for clarity on institutional XRP use. Now, in 2025, several US banks have quietly joined Ripple's sandbox programs, operating under new Federal Reserve payment modernization guidelines. This means they can legally test DLT-based remittance and liquidity tools as long as they comply with the Bank Secrecy Act and OFAC standards. Meanwhile, Hedera's focus on governance, transparency, and enterprise compliance makes it a favorite among policymakers who fear the crypto chaos of unregulated blockchains. Together, XRP and HBAR form what analysts call the institutional layer of crypto. Not retail hype, but real adoption. Chapter 6. What banks are not telling you. Here's the truth: most people don't realize banks will never announce their blockchain integrations until they're fully deployed. Why? Because as soon as they do, speculative traders flood the market and regulators panic. So instead, they test quietly, behind NDAs, through think tanks like the Digital Dollar Project, the BIS Innovation Hub, and Project Meridian. In these tests, XRP and HBAR aren't mentioned by name, but the technical fingerprints match perfectly with their architectures. In simple words, they're already running the rails. They're just waiting for the official green light. Chapter 7. The future of payments, 2026 beyond. By 2026, the biggest change in banking won't be interest rates or inflation. It'll be the complete reprogramming of how money moves, tokenized, instant, transparent. The systems behind this shift? Networks like XRP Ledger and Hedera Hashgraph, invisible to most people, but essential to every transaction. Imagine a future where a US company pays a supplier in Japan in 2 seconds, no intermediaries, no FX fees, no SWIFT delays. That's not a fantasy anymore. It's being tested right now. Final chapter, the takeaway. So when people say crypto is dead, remember this: the loudest coins make noise, but the quietest ones move the world. XRP and HBAR aren't memes. They're infrastructure, and the banks know it. The question isn't if they'll use it, it's when they'll admit it. Stay informed, stay curious, stay ahead of the system.